or at a minimum below the prior close over here, and then pushes above the middle of the black real body. Forex, opening, closing are the same. But it still has to have that white body close above the middle of the black real body. Okay, piercing pattern. And think about this also. Remember the dark cloud cover, we wanted a relatively long white candle, then a black candle, get into it to show a real change in psychology. Same thing is true with a piercing pattern. And this is perfectly fine. A relatively long black real body. It's not tremendously long, but it's not a spinning top by any means. And then a white real body to show us. And here, this one's interesting. See how it opened a little below it, the close? Okay. Here. See, most of the time it's going to open and closing are going to be the same, but this is fine. And you may have a data source where the opening and closing are the same. That's why we can't get hung up. It's not like in equity where you have official prices. There's no official prices in the Forex market. One of the great, I love Forex because it's so great, because when I do equity seminars, I'd say about 25%. How many sell short here on the Forex side? How many? Yeah, I was going to say on the equity side, it's only 10, 20%, and that's after years of the market being down. Forex are like commodities. It's just as easy to sell short as it is to go long, and that's what's great about, another great thing about Forex. Okay, this is not a piercing pattern. Why? In that. Yeah, right, didn't get more than 50% into the black real body, exactly. Okay, here we have a piercing pattern which confirms a support level. And interestingly, look at that support level with those two red semicircles on the left here. Okay, what are those? Two in bullish engulfing patterns, right. Okay, here we have a piercing pattern. This would not be a good risk reward. Great piercing pattern. It looks like it's really trying to bottom out. But based on those shadows, where's first resistance? We can't see the prices, but I think most of us will agree. Right here, right? Yeah. So, yeah, great piercing pattern. You can't do anything with it this time, but this piercing pattern is what? Is reinforcing a support level. I would certainly monitor that support level if the market gets back there, which it ultimately did. Okay. And I love it when the market breaks support and can't hold it. I love it. We'll look at that. It's called a crack and snap, and it's something I've talked about in my other DVDs. How many have my DVD sets here? Okay, quite a few. Okay. I call this a crack. I think in my first DVD it was called a spring, but I love this. So here, market breaks support and can't hold it. Okay. What do we have here? That long upper shadow. Is that a shooting star? No, there's really no trend to reverse. Yeah. One of the challenges we have is the market in an uptrend or downtrend. Something else to define the candlestick signal, something else that will help us, and we'll look at later, is seeing if the market is overbought or oversold. So obviously, even if you, for some reason, thought of this as a shooting star, which you shouldn't, we should say to ourselves, is the market overbought? And you don't need an oscillator to tell you no. So this shooting star becomes less important. And we'll look at that a little bit later. We're going to look at a lot of stuff later, huh? Okay. Here we have a dark cloud cover. Now, with that dark cloud cover, is the market just visually, does that look overextended at the time the dark cloud cover emerged? Yeah, I would say so. It's overextended. It then becomes more likely when you have a bearish candlestick signal for it to be reversal. Again, in spite of that, I wouldn't short on the dark cloud cover unless we had it confirming something else. Yes?
Is resistance then the tallest wick there?
Yes, on the dark cloud cover, any of the candlestick signals, great question. The question is resistance at the upper wick or the upper shadow. Whenever you have a bearish engulfing pattern or dark cloud cover, the bearish engulfing pattern, the highest high, including the upper shadow, or the dark cloud cover is resistance, the bullish engulfing pattern, the piercing pattern, the lowest low, including the lower shadow, becomes your support level. Great question. The question is, can momentum be substituted for volume? We could use momentum. When we talk about oscillators, we'll look at momentum. The way most traders will use momentum is seeing if the momentum is confirming the move. So I guess in that sense, you could use it as a substitute for volume, because with non-Forex, if the market's moving higher, we want to see higher volume. In Forex, if the market's moving higher, we want to see the oscillator, whatever you're looking at, stochastics, RSI, also moving higher. But unfortunately, I don't think there's really any specific substitute for volume. But that could be viewed as something that can be used as a last case scenario. What's that? Oh, the oscillators? Yeah, oscillators are a lagging indicator. We'll have a section on oscillators, and I don't ever recommend trading solely on an oscillator. It's only if we get a candlestick signal confirming it. To me, the best indicators are the candlestick charts. It's pure price action. Everything else you're doing, you're getting away from the pure price action. The oscillators, the mathematically derived measurements, but there's nothing more important than the pure price action. Okay, here we have what I call a confluence of candles. The market's descending, but as it's moving lower, we have a couple of piercing patterns and then ultimately a bullish engulfing pattern. What's that?
In this scenario, right? So you get excited when you see the first engulfing pattern.
The first piercing pattern. Yeah, this would have been tricky, because he was saying you get excited when you see this, okay, because is it confirming support? Yeah. Now, let me ask you, is it a good risk reward? No, based on this. Remember, your target might be very different than mine, but based on the prior highs, those long upper shadow resistance area, that would not be a good risk reward. But you're right, I would think about scaling back on shorts if I was short, get excited. The market closes under it. If you're long, you're wrong. Okay, get excited again. And this might be an okay risk reward. I have to take a look at my target would still be there. Okay, the low is the low of the piercing pattern. Is it still holding it? So it would still be long in the piercing pattern. It moved under the piercing pattern, but did it close under it? No. Okay, that's not quite a hammer, right? Because the lower shadow is not long enough. But nonetheless, that second piercing pattern is still holding. Okay. Now, this is a question. I don't know if it closed under the low of the piercing pattern, but to me, this would not be a decisive break. Now, for those of you who trade in black and white, say a close under the piercing pattern is a close. If I'm long, I'm out. I can't tell you, a right or wrong answer. But something like this, even if I don't think it closed under the low of the piercing pattern, but assuming it did, if it's a couple of pips, I would give it to the next day, at least the opening. But I'd still be a little nervous. So is the market making lower lows and lower closes? The piercing pattern is still holding, though. Okay. Still lower closes. Okay. Now, this is a very different scenario because we're going from lower lows to higher lows. We have a bullish engulfing pattern. What else besides this? What's with this bullish engulfing pattern? Look at the prior real bodies.